Hi, my name is Nicole Dominguez. Today I'm going to talk about Ciba Chemical Company and their acquisition of Allied Colloids. First we will talk about why Allied Colloids was a takeover target and the value they brought to the marketplace. Then we will discuss the effects of the acquisition on Ciba's balance sheet after the takeover, and finally we'll take an up-to-date look at what has happened since the acquisition. What caused Allied Colloids to become a takeover target? Companies can become two types of targets, either financial or strategic. Financial takeovers occur when a company seeks to gain more of a monetary advantage. This can happen, for example, when there is poor management or a low stock price. Companies with a financial motive will primarily try to strategize to transform the takeover company into one with a better cash flow. Allied was more of a strategic takeover opportunity. Strategic takeovers will usually propel the interested company into a better market position by creating a synergy between both companies. Allied became a strategic takeover target because of the mature market the company was in, the lean structure of the company, their financial performance during previous years, their projected future growth, and their strength in their product lines. Each of these attributes were and are key tangibles in which a suitor company would look for to gain interest in an acquisition or merger. How did Ciba value the gains from the acquisition? Ciba had been restructuring several departments in its company, and its ultimate goal was to strengthen core areas of its business. The company was already a leader in water treatment, but Allied had strengthened water treatment in ways Ciba did not. The majority of Allied sales actually came from the water treatment division. The acquisition would allow trademarks and processes to be combined to ultimately strengthen both companies' current processes. The geography of the marketplace that Allied was located in and serving was appealing because it was very hard to penetrate. Ciba needed a foothold in this already established market in order to gain overall market share and continue to expand globally. Also, because Ciba was in the process of restructuring their company, Allied could be used as a blueprint for successful ways to continue the restructuring process. As a UK company, Allied was ahead of many other peer companies in the same industry and had already streamlined the processes that the company specialized in. Finally, Ciba would also gain a very knowledgeable management staff with the acquisition. What effect did the acquisition have on Ciba's balance sheet and performance? Generally speaking, after the acquisition, Ciba's balance sheet had an increase in assets as well as liabilities. Ciba was able to increase long-term investments and goodwill on the asset side, as well as incur an increased finance expense on the liability side, specifically because of the acquisition. Performance for the company after acquisition can be seen by looking at Table 1 in the appendix. Ciba was able to increase sales by 10% in the first quarter of 1999 with the acquisition of Allied, compared to a decrease of overall sales of 8% without the acquisition included. Overall, the additive division that included water treatments, in which Allied specialized in, showed sales of $803 million, of which $244 million was specifically because of water treatments. The division had a positive 46% change from the same quarter a year prior. Compared to the rest of the divisions, additives were the only ones to have a positive percent change besides consumer care at 2%. It's important to note that although some of the poor performance in the other divisions can be attributed to lower prices due to increased competition in the market, water treatment still remains strong, which proved the acquisition important. Who won and who lost in the case study? The winners of the Ciba acquisition were Ciba, Allied, and Allied shareholders. Ciba was considered a winner because they were able to expand into a well-established marketplace and synergize with a well-performing company. This added strength to their core business, which was a goal they set out to accomplish. As noted in Table 1, without Allied, the net effect of the yearly performance by each of their divisions would have been negative. With Allied trademarks, knowledge, and experienced personnel, Ciba was able to generate a positive percent change of 46% in sales in the additives division, which was the only significant positive change for the quarter. Allied Colloids, along with its shareholders, were also winners in the acquisition because of the price paid for Allied. The price paid at $2.2 billion was more than 3 times the company's sales. This translated into a higher share price for the shareholders. The losers were Hercules Company and the shareholders of Ciba. Hercules Company's hostile takeover was unsuccessful, and their final offer fell short of the price that was necessary to acquire Allied. In previous years, the company was also unsuccessful at several other acquisitions. Hercules' struggles limited it from expanding into multiple markets and generating new sales. The shareholders of Ciba also didn't benefit from the initial takeover. In Table 2, net income can be seen in 1997 as a positive $172 million, whereas in 1998 there was a net loss of $791 million. This actually decreased the overall rating of the Ciba company, which shareholders do not like to see. What has happened since the Ciba case study? Ciba was acquired by BASF SE in 2008 for $5.5 billion. BASF paid more than 32% of the stock's closing price because they believed Ciba could help them to compete in the paper additives market. Since the Allied case, Ciba has also purchased Rezo, a chemical company, in 2004. Although Ciba was successful with both Allied in 1998 and the Rezo acquisition in 2004, the company's margins had slowly started to decrease over time, especially in the water and paper treatment division because of increased input costs. Ciba was forced to restructure. Even with the downfall of Ciba, BASF viewed Ciba much like Ciba viewed Allied in the acquisition. BASF saw Ciba as a company with strong divisions as well as a valuable ally to help strengthen its portfolio. Since BASF acquired Ciba, for the most part, they have had strong quarterly results. We can see in Table 3 BASF's most recent financial statements. Their balance sheet shows increased fixed assets from 25.4 billion euros to 26.6 billion euros from 2010 to 2011, as well as an increase in retained earnings and shareholders' equity from 2.5 billion euros to 4.9 billion euros. Their income statement also shows increased sales from 2010 to 2011, although their net income is slightly lower due to the higher cost of sales. Hercules Company, the opposing suitor of Allied in this case, has also been acquired since the case. After purchasing Betts Dearborn in 1998, shareholders felt that the purchase attempt was a failure, and the stock price fell from $70 to $10. The stock price never recovered, and in turn, Hercules was bought by Ashland Incorporated in 2008, also specializing in chemicals. This now concludes our Ciba case study. Thank you for your time.